course, we have been seeing this market roll over, the Dow coming off of an 8th straight session of declines. Joining us right now to take a look at this market and earnings for the first quarter, S&P Global Market Intelligence Senior Director Richard Peterson. Rich, good to see you.
Good morning.
What do you think's going on with markets these days?
Well, I mean, right now we're poised for the first negative month for the market since October. Right now, the S&P 500 is off about 20 points for March. We had a great rally going on since November. Year to date, we're up about 5%. But there's a little bit of anxiety that the Trump administration is going to have more, not to say setbacks, but going to have some difficulty getting their legislation through Congress.
Yeah, we've been saying it's all about the policy coming out of Washington. But the first quarter ends this Friday. How would you characterize the first quarter? Give us the lowdown in terms of earnings for the first quarter as the quarter ends this week.
Well, the consensus estimates are now for about 10% earnings growth, led by financials, information technology, the laggards being telecom and utilities. But if you look back in November, analysts were looking for nearly 14% earnings growth. Now, analysts have scaled back their expectations, which is in a bit normal. As we get closer and closer to the reporting, those numbers come down. But my concern is that a couple sectors have flipped from positive to negative. Case in point, consumer discretionary. We're back in November. Analysts were looking for about a 4% earnings growth. Now it's negative 3%. Likewise with industrials, looking for a positive growth back in November for the first quarter, 17. Now we're negative. Also, I think there's concern that some of the deal activity, while IPOs have been doing very well, M&A activities has sort of been trailing off of late.
Rich, so the game that gets played here is analysts scale back their expectations as the quarter goes on, and then companies come out and report and beat expectations. Sure. Is that what you expect to happen? So are we going to end up with better than 10% earnings growth after companies beat the analysts, the numbers that they guided down all quarter?
Yeah, sort of the game plan we've seen being repeated again and again and again. So I won't be surprised where we may even dip to see under 10% earnings expectations. But then as companies start reporting in April, we'll see a boost up and maybe end the quarter maybe 12, 13%.
And how about the negative that you're seeing on consumer discretionary? Is that just because retailers are having such a hard time with Amazon, or is that telling us that consumers aren't spending a lot of money?
Well, some of the retail signs are very positive, in fact. And I think the anxiety is maybe in terms of home builders, some of the media stocks, as well as the general retailing sector.
Rich, what does the rest of the year look like in terms of earnings growth? Second quarter of the full year and related to expectations, analyst estimates?
Well, I think, for a full year, again, we're looking for double-digit earnings growth, one of the best years in several years. I think the question is about tax reform. I think the concern, or not concern, but analysts were looking for maybe a reduction from the 35% statutory rate to perhaps, 20%. There's been some published reports saying that would add maybe 12%, 12% to the S&P 500 earning growth for the full year. I think for the full year we're looking at about $131 per share. If you got tax reform, maybe that would bounce up to maybe over $140 per share.
Have investors already placed their bets on that?
They're always placing their bets. The question is, are they the right bets?
Exactly. We have to wait and see what comes out of Washington.
Yeah. One of the themes I've been watching, and I wonder what your comment is, Rich, is that we've watched the small caps sort of divert. The market is split. So the big caps in the Dow is up for the year and strong, but the small caps are negative for the year. They're down. What's your assessment of why that's happening? Well,
again, I think it's a question of the global marketplaces. I think the large Johnson & Johnsons, the Caterpillars, whatever, they have global opportunities where the small caps do not have global opportunities. Maybe that's one of the reasons for that, the paradox.
And this administration was all about helping small business. So the policies were expected to be really positive for small business, but then when healthcare didn't go through, that's one big issue for small caps.
Well, again, we're still early on in the administration. We're not even into its 70th day, not even into its 10th week. So, the jury's still out where there'll be more successes down the road.
Yeah, but you're looking for double-digit earnings growth, as you just told Jagan, regardless of the policy coming out of Washington.
Well, it shows that the dynamics of the American economy. I mean, even during the Obama administration, companies, prospered. The fact of the matter is, if you look at since, you have to consider some of these companies came off a low base back in 2009 at the bottom of the credit crisis. Many of these companies that saw record earnings.
Feels like things are getting better.
Meanwhile, we're seeing IPO activity picking up. What's happening there? Is there more?
Yeah, I think again, there's a demand for new offerings. I think first quarter of 16, we saw about under 10 deals priced, only about $1 billion and change capital raised. Obviously, had two big deals this quarter: Snap raising over $3 billion,
right?
Invitation Home raising over $1 billion from the Real Estate Investment Trust. I think there's many so-called unicorns that could be poised to go public, maybe in the second quarter or later in the year.
So it was a better first quarter on IPOs certainly this year than last year,
especially for the technology sector.
Yeah. All right.
But one of my concerns again is the M&A world, where the M&A, we're looking at perhaps the slowest dollar growth since first quarter 14. Over the past 30 days, there's been only $55 billion in announced deals, where in the preceding 30 days, we were over $100 billion in announced deals. So there's been a slowdown in transaction activity.
All right, great roundup for the first quarter and look ahead. Rich Peterson, thank you. Rich Peterson, S&P Capital.